Hello everyone, and thanks for tuning in for another Market Outlook by Exness. My name is Andreas Semistokleous, trading content specialist here at Exness, and we will be checking on a potential trading idea for this week, the factors affecting it, and which data from the economic calendar can influence its moves. But before that, let's check on the performance of last week's idea. The idea was a buy on CME stock with a target around 290. This target has not been reached just yet, but it might have the potential to do so in this week. For this week, let's focus on the dollar-Swiss franc pair for a buy trade with a potential target around the 81 cents or higher. The price has been trading in a sideways movement for the last 3 months, and with the upper level of this channel being around the 81 cents and lower level around the 79 cents. Recently, the price rebounded from the lower boundary, and therefore the target of the upper boundary seems to be still in play. Stochastic oscillator is near the extreme oversold level, further supporting the scenario of a bullish correction. On the other hand, the moving averages are validating an overall bearish trend, but moving averages tend to not be very reliable in trendless markets. The main narrative behind this week's idea is the expectations of what looks like a slightly stronger job report, with unemployment figure expected to remain static while the NFP number is expected to go up. Also, if we take a look at the probabilities of the Fed for their next meeting on the 10th of December, we will see that these have shifted from an almost confirmed rate cut to majority expecting hold. This further supports the dollar against its pairs and further supporting the buying narrative of this week's idea. The important data on the economic calendar that investors need to pay attention to are the FOMC minutes on Wednesday and the non-farm payrolls and unemployment rate on Thursday. So in summary, the trading idea for this week is a buy on dollar-franc pair with a potential target of around 81 cents. The main factors affecting this trade are the expectations of the US job report as well as the shift in rate cut probabilities by the Fed. The important releases that investors will be monitoring this week are the FOMC minutes, the non-farm payrolls, and the unemployment rate. Remember, this is not a signal, it is just an idea for a trade. It's not guarantee of success. Always do your own research and remember to manage risks.